Hey, it's Clay Trader, and this will be a video chart on ticker symbol CEMP. We will take a look at the 15-minute time frame. Real quick, what do I mean by 15-minute in case maybe you're new to charts? Instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 15 minutes. So while this may look like a couple weeks worth of time right there, it's actually just today's price action broken down into 15-minute time slices. I like to do this analysis, or this time frame I should say, because I think it does a good job of telling the quote-unquote story of the price. A bit easier to see, along with mapping out levels of support and resistance a bit clearer. So don't mean to state the obvious, don't want to rub salt in anyone's wounds, but a pretty nasty day. Although late day action got somewhat interesting, and we'll see if there's any sort of true bullishness behind it, or if this is just some sort of kind of pause by the bears before resuming things in the downwards direction. And what I mean by that is, one of my more favorite patterns is taking shape here. Whoops, I didn't want that. Let's change that up here real quick. Is that pattern right there, which is, a falling wedge. Probably not the best looking falling wedge, but I still feel comfortable enough calling it a falling wedge, which actually is a bullish pattern. It's kind of counterintuitive. You would think a falling wedge is bearish, but actually a rising wedge is bearish. The falling wedge is bullish, and that's kind of what's caught my eye here. Now, there's no such thing as a guarantee in the market, so please don't misconstrue what I'm saying. Just because it's a bullish pattern does not mean that I'm saying this thing tomorrow is going to be up at 13 bucks. I'm not saying that. But it's nonetheless an interesting setup that's worth at least keep an eye on. So, the key part of the pattern here is just the bottom portion of it, which is acting as support. And then, the key level of resistance is the top portion up there. And if, there can be any sort of breakout through it, then, it could definitely, get some nice upward momentum. This is, was beat down very badly today. And I bring that up because sometimes these stocks that do get beat up quite a bit, there can be some very, very solid bounces. Now, I'm not saying reversal. That's a whole different ball game, but at least like a bounce or some sort of dead cat bounce, again, not guaranteed, but anybody that's been around long enough would not be shocked to see some sort of stock like this, after getting beat down as much as it did, produce a dead cat bounce. So in the event it does start to bounce, I do want to map out a couple of these key levels of resistance. Now, we already talked about that top orange line right there, which is the top portion of the pattern, but in the event the price can push through there, the next key level of resistance, if any sort of breakout is going to continue, is right there at $8.40. And then after $8.40, next key level up there right around, what is that, the $9.80 mark. So one step at a time. Obviously, first got to get a bounce off the lower portion of the pattern and then get up there and break out through it. But again, if it can, then keep an eye on those next couple of hurdles that the bulls are going to need to clear in order to continue to gain momentum with any sort of bounce. So a lot of volume in this one today, a lot of eyeballs on it. It'll be interesting to see how tomorrow unfolds. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.